This is the Lead Left podcast for the week of August 13th. I'm Randy Schwimmer. Welcome back. In this week's commentary, entitled Direct to Consumer, we take a look at large sponsored financings led by direct lenders. After Ares underwrote Thoma Bravo's billion-dollar Click deal in 2016, market observers thought this might lead to a wave of similar mega buyouts led by the non-banks. Private credit providers have raised record funds in a variety of vehicles, allowing them to compete against banks in the business of underwriting larger leveraged loans. Refinitive's Leila Parker nicely summarized this trend in a note last week. Direct lenders, she writes, with deep pockets and increasing scale are stepping up to fund large-sized mergers and acquisitions, in a sign that the private debt markets are now open to large as well as middle market companies. One such deal was Apollo's recently announced $1.8 billion financing for New Media Investment Group's acquisition of Gannett & Company. Earlier this year, there was a £1 billion UK deal for the telecom services provider Daisy Group, led by Ares, that helped buy out a minority partner. Leila also mentions a $1.25 billion Goldman Sachs private credit and HPS unitranche financing for software solutions provider Ion Group. The loan helped Ion's purchase of BC Partners' merger market, now called Curus. Our chart of the week from Refinitiv highlights how the number of LBO loans over $1 billion has steadily grown since the Great Recession. While the share of these jumbo loans being arranged by direct lenders is still in the minority, it's clear issuer-friendly conditions have supported this trend. It's also clear in this chart that the share of middle market sponsored financings led by direct lenders is large and growing, with almost 60% of this year's deals being arranged by non-banks. Last week, we asked our readers to choose the most important soft skill for today's investment professionals. Problem-solving skills was identified as the most valuable one. However, the results are pretty even. Check it out here. This week, we asked our readers, what is the biggest challenge of investing in sustainable investments? Please click the link below to select your option. We feature this week a chart from private debt investors. The first half of private equity fundraising reached the record low in 4 years. This slowdown may stem from a previous fundraising glut, giving managers sufficient capital to deploy. That's the week of August 13th from the Lead Left. I'm Randy Schwimmer. Have a great week.